Report. This is Mike, and this market report is about mortgage rates, what goes into its impact, what drives rates on a daily basis, and more of the trends. We don't get so much into price quotes or anything like that because there's plenty of other places for that, but we just kind of get you into understanding what variables are out there that are affecting rates on a daily basis, and if they're going up or down, and what kind of the trend line would be, and what to kind of watch out for the week. Now, a little bit about myself. I'm a loan officer. I do work with the national lender. So if you guys got questions about mortgage rates, you got questions about mortgage programs, if you guys are looking to refinance or purchase, please feel free to reach out. Love to be able to talk to you a little bit about your scenario and how we can help you guys out. Meanwhile, why don't we just jump right into the report here? We do got a couple economic data to report, and we'll start off with, well, first day this week is, or first day of the week for jobs numbers, and that is the ADP. Came out their data for the month of April. Tomorrow we'll get the initial jobless claims, and then Friday will be the big one from the Bureau of Labor Statistics, or BLS. So, month of March initially came in at 517,000 new jobs. However, that was revised higher to 565,000. Now, forecast was calling for 800,000 for the month of April, and it came in a little less at 742,000. So they were disappointed, but they are keeping in mind that, hey, this is the highest number we've seen in quite some time for ADP. So it's kind of a grain of salt type of thing where, they are disappointed it wasn't higher, but yet these still a very good number here. Last but not least, we got the ISM non-manufacturing PMI and or services sector. We had anything above 50 is kind of expansion or growing, and we had a 63.7 in the month of March. However, forecast gone for 64.3 and came in lower. Instead of going upwards, it went downwards to 62.7. So two numbers that came in a bit disappointing in terms of economic data. So let's see how the markets are reacting to it. Stocks actually did start off lower. They didn't like the data. They thought they were very disappointed with the data that came in and have worked their way up into positive territory so far. They also got spooked by Janet Yellen's interview yesterday that was released yesterday. And basically, if you don't know who Janet Yellen is, she's the current treasurer, but she used to be the former Fed chair just before Jerome Powell has become. And so they're on good terms. They know each other well, and but today she came out and made comments saying that she did not intend, or try to predict anything or raising rates. She did not try to influence the Fed to try to change it, because her comments yesterday pretty much were 180 of what the Fed's been kind of saying, that they're going to move slowly, where she's kind of saying they could be moving much quicker in an overheating environment here. So, regardless, investors kind of looking, kind of keep an eye on it, but not really kind of giving much attention to it now. And things are kind of improving a little bit. We are still getting some quarterly reports out there, earnings reports, and those are things that are kind of also driving the market a bit now. We've been getting some good data, which is good news for that, for those companies. So let's jump ahead, see how this is affecting the bond market, what's going on with mortgage rates. We are remaining the same. So if you look here, we've been kind of starting the morning lower, but working our way back upwards. So we're going the sideways pattern for pretty much this week. So the big catalyst this week, of course, will be the BLS jobs data. So that could be a bit of a mover, could bring us upwards or downwards. We've been at this level for quite some time. We haven't seemed to be able to break above this level, this 103.80-ish range. So we've tested, but we haven't really been able to really kind of break much further from that. So right now we're up 2 basis points. Mortgage rates remain unchanged. So for the most part, we've been pretty much in the same position all week, unchanged. But again, that could change as the week goes on. Once we get to jobs data, we'll have to see if it disappoints or not. They are expecting a high number on Friday, so it'll be interesting to see if we get that number. So anyways, let's see how yields are doing. Yields are actually started off a little bit higher. As you see, we started off a little higher here, breaking above the 50-day moving average in between the technical level. We even did test this double arrow here at the 25-day moving average in this technical level, but have since subsided. Now we're just below this 50-day moving level right now as well, sitting at about 1.6. All right, folks. Hope that goes well for you guys. I hope you guys If you guys have any questions, please feel free to reach out. If I could be of any assistance, again, feel free to reach out. Otherwise, you guys have a great rest of your day. Thanks so much for watching, and I'll see you in tomorrow's video. Bye-bye.